Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees.
One of the things I'll speak about is building Bitcoin to be money for 1,000 years. Let's take a several decade view or a couple century view of things. And I know it's hard to do, but I think from the perspective of making sure that we design Bitcoin such that we don't create vulnerabilities. Usually those are centralization points, but they could also be single points of failure.
So I want to start off just kind of giving people a little bit of a background on you. So you were the chief technology officer, an executive vice president of product, an executive vice president of international markets for Gateway. This is back in the day when Gateway, back in the 90s. I forget when they hit this market cap, but I looked up that their market cap got as high as 24 billion for the company. And so, I mean, this is a major. I had a Gateway, back in the college days. so, um, and you were a major executive in this company. So you've done product development at a very high level. And I guess my question for you is starting off there. How with that background, when and how did you come across Bitcoin? And like what was the initial take coming out of this hardcore tech background? What was your initial take when you started hearing about it?
Yeah, well, by the way, thank you for remembering. For the older members of the audience, hopefully you remember well, because we were quite successful, and not to pat myself on the back, and it was obviously a massive team. I was
Yeah.
part of it, but as you said, we had about 25,000 employees at one point. We had 400 retail stores. We had about 10 billion in revenue. We were making about 10 million PCs a year, and that was it's almost hard to imagine now when I look back at it what I went through.
Yeah.
It's almost like that was a different person, but it was really a magical time. And it leads a little bit to the question you asked me, which was how I got to Bitcoin. Because I'll be honest that I feel like when I left that industry, which was in 2004, I had spent about 20 years there. I got a little lost. I got to almost say I
Mm.
was like a little lost, not
Mhm.
not in some major way, but it's kind of wondering like what's my purpose? Because I had been through this thing that was just so it was so big, like you
It's a
said. Like, I
behemoth.
woke up every day with this purpose, like, and we were my background goes all the way back to the mid '80s and my early PC development days, so right at the cusp, and so I didn't have something that exciting, and
Mhm.
so life was just kind of bland. But anyway, I in 2017 one night I got a phone call. I always give my wife credit for this. It was 9 o'clock at night. My phone rang. It was a Seattle phone number. I did not recognize the phone number, and I wasn't going to answer it, like probably most people don't want to answer, right? And my wife said, "Answer it." I don't want to. She said, "Answer it." So I did. It turned out it was an old Gateway acquaintance. And he said, "Bob, um, I'm starting a company. I've raised a bunch of money. I need 300 Ethereum mining servers." That ended up turning into 800 Ethereum mining servers a little later, as fast as I can. I can't get the NVIDIA chips. I can't get anybody to design something professionally. Can you do that? And I'll make that part of the story short. I didn't know much about cryptocurrency or Bitcoin or any of those things at that time, but I was a computer guy, and I just looked at it as a computer guy and ended up saying yes. I started a company, which we now know as Barefoot Mining, to build those, and ended up being about a $6 million order. So I started a company to fulfill that, which you're
Mm.
pretty lucky, right, to get a $6 million order as your first
Yeah.
PO. But I looked at it as a computer guy, and I had contacts along with Keith Thomas, who's the president at Barefoot, along with me. We're both ex Gateway people. Little story now that NVIDIA is what eclipsing Amazon and market cap is. When they were a startup trying to find their first customer, the very first customer of NVIDIA was Gateway.
Gateway.
We were the first ones to put their chip on a motherboard. Keith was the head of desktop engineering working for me, and who works for me now and is part of our team. So we were integral to kind of that little start for NVIDIA at that time.
That would have been huge risk for you guys to incorporate this, NVIDIA chip into the hardware. Like, I love production. I love talking about like going through, because there's a lot of risk, especially when you're dealing with hardware, running a new chip like that. Like, walk us through, more for my own curiosity. That risk profile that you were looking at putting in this chip, was it done on other? You said the Gateway is the very first company to do this. What type of purchase order? How many thousands of units? And like, how are you guys going through the risk of that?
I can't remember the specifics, but it was probably, given where we were at that time, this would have been, I don't know, 92, 93, something in that order. It was probably an order for 50 to 100,000 graphics chips.
Wow.
At the time. We would have always had a plan B. I'm sure I can't tell you specifically, it's too long. I'm sure we had a plan B, which was, hey, if we were designing for a specific desktop model, right? And we were at Gateway, for those of you who don't know Gateway well, and you may even remember, we tried to push the edge. That's, our position in the marketplace was we were a little more consumer oriented than business oriented. And we tried to push the envelope. We were tried to push the value, especially like that you could get, in this case, graphics performance at a certain level at a price that nobody else had seen before. And so I'm sure that's what we were chasing with NVIDIA. They were, they were a startup. They had some great architectural things. They've always, it's amazing, by the way, for 30 years, they have been able to maintain that technical edge. My hat's off to them. But yeah, there's a lot of risk associated in that too. But it's the only way to have been successful. In the early 90s, the PC market was trying to sort itself out. Gateway was at the time probably about $1 billion company, probably 10 to 12 in terms of market share in the world, something on that order. But we hadn't made it yet. We hadn't IPO'd yet. The IPO was still a little bit away. So we had to have a little bit of that gunslinger attitude to chase and try to get to the top of the pile. And as I said, they were grateful for that. And so when we called up, some of you might remember in 2017, obviously we're still in the GPU era, and especially in the non-Bitcoin related coins. I mean, that was heavy GPU stuff. So if you could get access to the chips, you could do really well, at least in fiat terms, mining. And that's what we did. We built this design, got these things to market, and did quite well with it. A little sidelight, I have a background in economics as well, more of a macro thing. I'm not on par with our buddies like James Lavish or Larry Lepard or Lynn Alden in terms of my macro, but I try to at least be proficient, and I have been, and I got turned on to Austrian economics in the early 2000s, about 2001, 2002, when the dot-com bubble burst. I soured heavily, and so I started looking for something different. The short version of that story is I had done very well. I was part of the Gateway IPO. I had done well. And then I cashed out a lot in the late 90s, only to see a lot of that wealth evaporate in the crash, right? Yeah. And I had put a lot of faith in traditional financial advisors and wealth advisors in that period, and they failed me. So I started looking elsewhere, like what's wrong? How can this be fixed? So I found Austrian thought at that point. As I started to, after getting like this order done and starting to sell this Ethereum equipment, I started to look deeper technically at what Ethereum really was. Because at first, this was just a computer guy building computers. That's what that was. And then I started looking at it. And so first I looked at the technical aspects of Ethereum. and I started to get uneasy. I could see the technical complexity that they were trying to tackle. And if you've ever been involved in big software projects, you realize that
Yes.
they don't work well, right? You know, and they rarely come together. They never meet their timelines. They basically never meet their goals and objectives. And what I saw was this piece of software. That's how I was looking at it, right? With all these tentacles and interdependencies, that this isn't going to work. You know, and then peeling deep into what really is proof of stake. And that led me really to Bitcoin and proof of work. And so I started to appreciate and understand first from a technical perspective, but then seeing the Austrian in me starting to see the monetary policy and the issuance and like these sorts of things and those sound money principles really coming out in Bitcoin. So we pivoted at that point. Unfortunately, we didn't have access to a chip at the time. Maybe we can talk about that a little bit later.
Yeah.
But
yeah.
we didn't have the ability to design our own systems at that time. But we did. So we did the next best thing, which was we signed an agreement with Bitfury, which was a large European maker of Bitcoin mining equipment, and became the U.S. distributor and service center for Bitfury equipment. So that gave us an entree 2018, 2019, 2020 to enter the Bitcoin world. And we migrated from providing systems to providing hosting systems to now largely, I guess you would call it self-mining, although we usually do it through partnerships. So, but we do have a small hosting business and self-mining. But you know, our real desire is to get back all the way to designing our own systems.
So I love this. This is the perfect lead into the next question I have, which is when we're talking about application specific integrated circuits. There's basically one manufacturer in the world right now. Now I know Blockstream is working on a solution. I think they're maybe in the test phase of the ASIC that they're building, the rig that they're building. You are working on, and I don't know how much you can share, and if not much, that's perfectly fine. But I know that you're working on your own ASIC and your own design work, and you're working with some people from your past on designing this. So lay it on us if you're able to, and if not, then be
Yeah.
the push as much as you want.
No, I can tell you a fair amount today. And as I already lead it in, I think that one of the things I want to give a little bit more background. I believe in self-sovereignty. So as a miner, if I have something I call the miner stack. And if you can visualize this, it's the energy, it's the chips, it's the systems, operational excellence, and the pools. Okay, so if you want to truly be a miner and you want to deliver to the world Bitcoin and block space, then unless you control all pieces of that, at least to some degree, meaning own it, you're not self-sovereign. It means you are dependent or you require somebody else's permission to fulfill your vision. So for Barefoot and for what I'm trying to accomplish personally, that's what I'm after. I want to own pieces of that. And you had a chance, Preston, to see what I'm doing like on the energy side, where
Yes.
you visited our facility at the ocean launch, and so where we own our own small hydroelectric facility, among other things. But we're trying to do that. We're trying to build on that stack. Well, the next piece in the stack is the ASIC, the chip, not the machine. And by the way, it's very, very important. We can talk about this a little bit more later. But I think it's very important to, when you use the word ASIC, refer to a chip, an application-specific integrated circuit. And by the way, ASIC is not specific to Bitcoin either. I think a lot of Bitcoiners don't understand that they've been around for over 30 years. I worked on my first ASIC probably in the late 80s for it was a power management circuit for charging. They've been around for a long, long time. They have really nothing specific to do with Bitcoin. But as you said, today Bitmain dominates the market. Bitmain makes chips in partnership with TSMC, and they design the systems. If you look at the PC market, though, the PC market has Intel, it has AMD, it's had other companies in the past. Several other companies have been part of that, and they are distinct from the system makers. In other words, the chip guys do what the chip guys do, which is develop logic and work on wafer processes and things like that. And the system guys do what they do, which is they interact with the users and they build the machines that fit a specific need.
Mm-hmm.
So I wanted to be involved in that. I got connected. So to fulfill my vision, I needed to do that. Building an ASIC is an expensive proposition, though.
Yeah.
Especially the kind of ASIC that we use in the Bitcoin world.
Yeah.
Tens of millions of dollars, hundreds of millions of dollars, even really, when you get down to it, and in the very end. So I connected to a group. It's led by a guy named Bum-Soo Kim. The company's called M5ers. Bum-Soo.
Give the background on him.
Yeah, Bum-Soo is among others, a former employee of Samsung. He would be credited by most people as being the godfather of the solid state disk. So he comes with pretty strong credentials, let's just say.
So people, just for the audience, so when you're thinking of memory or you're thinking of storing information, you have the disks that spin, and then you have a steady state drive that doesn't spin. Obviously, the latter is really important if you're dealing with any type of environment that vibrates or has environmental factors that you just can't have a spinning drive, right? It's faster because you're not having to physically spin the disk in order to get to the spot of the memory that you're trying to find. So the fact that he was literally the guy that invented this, is this right, Bob? Like invented this technology?
I think he would be considered the godfather of it, yes. And there's a lot of people involved. I mean, it's kind of like saying, who's the inventor of the PC exactly? But the godfather, the central point of this whole thing coming together would be Bum-Soo.
And so he's working with you on this ASIC.
Yeah. Well, I think it's more appropriate to say I am working with him. Because I want to be fair. I am not the guy leading the ASIC design by any stretch of the imagination. But I can provide some insight and help as a system guy, as a guy connected to pools and doing this.
Does he believe in Bitcoin? Does he believe in Bitcoin, or is he looking at it just more from a hardware design standpoint?
No, he believes in Bitcoin.
Wow.
He believes in Bitcoin. As do the other members of the team, which, by the way, are no slouches themselves. We won't go through individual resumes, but there are folks from Intel and Broadcom and companies like that are also part of this team. And we're focused initially. I'm acting on the board of advisors of the company. And we are focused initially on the enterprise market. So we can maybe talk, time permitting, about where I think mining equipment will go, but I think we'll see a divergence instead of one kind of machine. We're seeing a little of that already, right? We're seeing the BitAxe folks and some other people trying to do things in different tranches. But I think we're going to see the enterprise market truly move toward enterprise class computing. And that means different form factors, higher energy densities. And just to give people a sniff of what we're working toward is a chip that would enable, for instance, single unit hashing power on the order of 2 to 3 petahashes or 1 unit.
And what is it today, just so people have the context?
Typical one would be about 100 to 120 petahashes. This is like 30 times higher.
Wow.
Than that. Now, go ahead.
Well, yeah, the thing that I would immediately think is, okay, so now there's going to be an infrastructure change. If you build this, you get it to production, you start, selling these in any type of large scale. Do the mining facilities have any type of infrastructure challenges with the size and the energy that's required to be pumped into something like this versus what they're traditionally templated for? Because it's very traditional, the sizing and kind of the energy constraints today.
Yeah. Well, it means much higher energy densities, first of all.
Mm-hmm.
So, in a given form factor, you're going to see much higher energy density. Now, the AI market's also seeing the same thing, though. So, we're
Okay.
seeing like what, for instance, companies like HP are trying to do with NVIDIA to do this high performance computing for AI. We're seeing the same sort of massive energy densities that the M5 group is trying to move toward. And it does present issues. For instance, a machine today, a common machine used in Bitcoin mining, like an S19, might be about 3 kilowatts. And it sits in that shoebox form factor, which is pretty awkward, by the way. Really,
Mm-hmm.
my opinion, poorly done and not built for large scale. The server market, the traditional server market, what you would see in a traditional data center are standard. There is a standard rack mount size, usually delineated and used per unit, right? So you could have, for instance, the Bitfury equipment that we used to work with was all done in that same vein. And we still have some of it deployed in some of our operations, but it's like a 6U form factor, which means 19 inches wide. Forgive me if I'm off a little bit. I don't know, 9 inches high or something on that order. It's a very standard form factor. Also means that a lot of the components that go in that are standard too. That some of the power supplies and some of the things that go in there, you can leverage other industries that are using those same components. So as a system designer, there's a lot of appeal to that. Those involved in Bitcoin mining, whether they're at the hobby level or the commercial level, probably see things like, hey, the access to power supplies and different components and things like that. They're a little bit overpriced relative to other markets. But I think that's largely because of volume, right? Bitcoin mining is still a tiny, tiny industry. There's a few million machines sold annually,
Mm-hmm.
right? And I like to put it back in perspective. Gateway was building 10 million PCs a year. So the Bitcoin mining industry as a whole still isn't even at where Gateway was 20 years ago in unit volume.
Wow. Yeah.
And Gateway wasn't even the top vendor. We were like number 5, right? So just to put that in perspective, we're a very small industry. And I'm not sure how big we'll ever get, honestly. I mean, relative to these other industries, I'm not exactly sure. But what we're trying to do, like I said, with the M5 group is really change this vector. Now, the truth is, you mentioned something in full transparency. Like, one of the things that we have to change is like the people making containers and designing facilities and all that. They've gotten pretty used to
Yeah.
this current form factor, and so there probably will be one of those resistance points
Mm-hmm.
to this will be this. But ultimately, I think that the efficiency and the cost effectiveness of these other designs will overpower the legacy, the need to be in the legacy design, because it just runs out of gas.
Yeah.
It just cannot dissipate the
Pace. Yeah.
thermals properly and all that. So yeah.
And I'm assuming this would be immersion.
Well, eh, probably a lot, but not necessarily.
Hmm. It's also fascinating. You brought up AI earlier. Do you see a world where it's almost a necessity to have Bitcoin miners alongside AI GPUs so that I'm thinking about, so these GPUs, they're plowing through all sorts of calculations for AI requests, and then people go to sleep at night and maybe they're just not being pinged as much as they are during the middle of the day. But you got all this energy that that you've negotiated at really cheap rates for these data centers. and processing centers. And why not mine Bitcoin with rigs that are there ready to catch that drop in load? Is that something that you think is going to become commonplace, or am I totally off the mark with that idea?
No, I think you've very accurately represented that, because as right now we're at a point in AI where if you're running some sort of AI application, it's somewhat similar to Bitcoin, where the demand is almost 24/7. There's so much money and infrastructure being thrown at it. It's hard for me to believe that every AI center is going to be able to maintain a constant load.
Mhm.
And so I think that problem is definitely going to come. Um, I'll say one other thing though, and that's that maybe the machines that sit next to the AI machines aren't just mining Bitcoin. And I think
Yeah,
I've talked to you about
yeah, yeah, I wanna get into
this
this.
a little bit.
Yes, this
So
is,
I don't know.
yeah, so you have a company that you're looking at, I don't know where you're at with this. Is it called Chaos? Is that correct?
Yeah.
Is that where you're
Yeah.
going? Yeah. Um, I just wanna, like, just take a quick step back. So, like, when we think about AI and we think about what it's doing and how it's taken all of these patterns, it's compressed these patterns, and then you're basically pinging that compression to unwrap and pop out an answer, right? So it's like highly organized data. And then next to it on the Bitcoin mining side, we're trying to, how do I even describe this? Figure out in the most chaotic, uh, you know, chaos that you could possibly imagine, the one input that produces this output. And these two com- computers would be sitting side by side. It's like they're literally polar opposites sitting next to each other. So it makes sense that that would be like the construct from a
Yeah.
hardware standpoint.
Yeah.
I
It
totally
is
did a disservice
amazing. I
on
don't
it.
know if it's coincidental or not, but it is an amazing observation that and I do think it is a very logical extension of this. Now, what I will say is it's likely that in those situations that this is part of a cascade of technology. So, if I was designing such a center, if I was putting up a new AI center, I probably wouldn't go put S21s and high end Bitcoin mining equipment there that is kind of sitting idly,
Yeah.
waiting for the energy, basically for the energy to free up to go run for a few hours or a few days and turn on and off. That I think but if I had a bunch of old S7, it's not 17s, probably older S19s right now that are toward the end of their useful life in normal circumstances, I would probably locate those there. Like they're
Mhm.
they're kind of the backup. We have that sort of situation with hydro. So in a hydro situation, you often have a base level that is produced on a constant basis, relatively constant basis. And
Mhm.
then it rains, something happens, you have a bunch more water flow, and boom, you have some extra. So what do you do? Well, you take and you put newer, more efficient equipment that runs essentially 24/7 in the base load. And then you have the other stuff standing there. So in those, okay, there was a rainstorm for 2 days, you're going to have an extra 300 kilowatts. Okay, great. Then run the old stuff because it's free energy at that point. So we design kind of that way. And so I think the same sort of principle would apply in like this AI
AI.
situation.
Yeah. Yeah. That's so fascinating. Anything else you want to highlight on the chip, or on the ASIC side before we go over to this chaos discussion?
Uh, I mean, I'll just say, it's a long path. We all want it to
Mhm.
go quickly. You mentioned some other folks, like like Blockstream and Block, and others are working on chips. I am very supportive of what all those folks are doing. I will look seriously. I already have looked at some of the chip designs there. We need that. This development is really important to the development of a healthy ecosystem. And I think to a certain degree, separating the ASIC from the system is a very important. It will drive innovation. First of all, you get the best system designers and the best chip designers, and they each specialize, right? I think that it's a natural thing to happen in a market. But I think more importantly, it creates diversity. That I when I speak, sometimes one of the things I'll speak about is building Bitcoin to be money for 1,000 years. And most people think, I would say, in a very myopic way. They may look back 2 years and forward 6 months, or vice versa. That they're very narrow, and I see that happen a lot in the industry. Instead of really stepping back and say, let's take a several decade view or a couple century view of things. And I know it's hard to do. It's hard to make money thinking that way, but I think from the perspective of making sure that we design Bitcoin, by that I mean the entire ecosystem, all the components of the ecosystem, such that we don't create vulnerabilities. Usually those are centralization points, but they could also be single points of failure. So if you envision a world where only Bitmain makes chips, and I'm not picking on them specifically, but if you have only Bitmain making chips, only Bitmain making systems, you kind of now have a single point of failure, right? If they build a couple generations of chips, and I'm just speaking hypothetically, there was something wrong or some vulnerability in those chips, we have a huge problem, right? And the whole thing crumbles. We need this. It's very, very important that we get this landscape such that those things can't happen. Because when you look in a short-term window and you say, what's the likelihood of there being that vulnerability even in the equipment that's sitting out in the field today? Pretty low. I can't put a number on it even, I don't know. But let's just say, for argument's sake, it's 1/10 of 1% is that odds, and that's the case. Well, when you apply that to the next year, you go, well, there's a 99.9% chance that nothing happens, right? When you apply it to 1,000-year window, it becomes highly likely that happens. So in other words, that's not me saying, I'm not trying to panic anybody or anything like that, but we have to recognize when these, as a community, like almost that's I think a responsibility of the community to continually look at those things and say, whether it's pool centralization, ASIC centralization, geographic centralization, lack of a derivatives market, maybe we can talk about that in a little bit too. There's all these different things, I think, that could create vulnerabilities to the long-term viability of the ecosystem. And as I know you've talked about, we will probably only get one crack at this thing, at doing it and doing it right. And if we don't, the existing system will win. And there are major motivations for those who don't want us to succeed to try to expose those vulnerabilities. They will continually be tested.
Bob, on this one in particular, it just seems that creating your own ASIC to compete with Bitmain is so capital intensive. I mean, I'm just thinking about the expertise in order to create the ASIC, have all the considerations, whether it's heat, whether it's you name it. I mean, there's just I talked with Adam back probably a year ago or almost a year ago about their efforts at Blockstream building theirs. And he described it to me. He's like, it's like truly trying to engineer a sports car. Like, you are trying to make the thing go as hard as you possibly can, or else it's just not competitive. And when you're
Correct.
pushing the limits on the design from an engineering standpoint, you're running into, oh, I just fried a circuit board because I'm pumping too much energy through this thing and I didn't have the proper, or whatever the case might be, things that you're not thinking about if you're not sitting there designing this thing. Not only do you have to engineer it, then you have to go through the test cycle. Then after you go through the test cycle, you've got to get people to give you, like, the number you said was 100, call it $100 million for production.
Yeah.
Then you push out the production, and you don't have, especially if this is your first rodeo, you don't have a really high fidelity on what the reliability of that newly issued design and product is. If you've done it for 5 or 10 years, you might have a lot better understanding what the reliability is, because you know these components and the pieces and all the mistakes that you've made along the way. But if you're doing it for the first time, like, these are risks, right? And then, like, you don't control that entire production line, right? So you might have everything lined up. You might have the capital there, and then you might have some bottleneck that's upstream 3 paces, some manufacturer 3 upstream of you, that the long lead on that is 6 months behind where it was, and you were supposed to have these things out the door. And so, like, all of those risks that I'm talking about is just super capital intensive, it's time
Yeah.
intensive, and, I'm not trying to make an excuse for why there isn't a competitor in the space. I guess I'm
Yeah.
just trying to rationalize for the audience so that they can understand why Bitmain has basically been in this predominant role. And you said it yourself, the volumes aren't high compared to manufacturing other sorts of hardware, whether that's GPUs or whatever. So I think that's the challenge that we're really up against. And I'm just thrilled that people like you and Adam and Jack Dorsey and others are stepping into this space to really try to offset that from just peak engine, like, really some of the strongest engineers there are going after this. It's really exciting.
Yeah. Well, you're right. I do want to reiterate again that Bum Su, who I mentioned, he's the leader of this one. I'm along for the ride and supporting him and helping him,
Yeah.
but he, hopefully I'm contributing. But my involvement, I think, does speak to how serious I think filling this gap is. Like,
Yeah.
the
Yeah.
need is like that big, and the fact that guys like Adam and Jack are doing similar things, then in their way, also I think speaks volumes about it. Now, it also speaks volumes to, we all believe we're not doing it. I don't think any of us are doing it purely from a philanthropic, or we believe there's
It's a
a lot of money
win-win.
to be made. We
Yeah, there's a
believe that
win-win.
this they're to do it right, this can be massively, massively successful. And you're right, though, there are tremendous number of risks. We're still an early stage company.
Mhm.
We by the way, I'll say this. I can only say so much. I mean, we believe we've got major architectural enhancements.
Mhm.
We believe we have the relationships with the foundries to be at the very leading edge of, um,
Which is
where,
huge. Yeah.
yeah, yeah.
That's
And
huge.
so, and that's important. And that, by the way, that speaks to we've got
Yeah.
Intel folks and Samsung folks and Broadcom folks in very senior positions from those companies. They have the relationships with those organizations that can help make that happen. Yeah, well, it's not a foregone conclusion that we are successful, because, as you said, there's a lot of stepping stones. A lot of it is financial. Um, we've got functioning FPGAs right now, so there's kind of a process you go through of
Mhm.
design, and then you take it to an FPGA, and we're fleshing some stuff out architecturally there, and then it moves toward, okay, well, now you've got to take that logic and work toward the ASIC. But we've been able to prove in concept, in actual logic, that some of the performance enhancements that we're expecting to get are going to come from that. And but as you said, I mean, we could fail just in capital raising.
Mhm.
That alone could could cause the problem, because
Mhm.
at some point we need support from whomever to take us through these different stages. And so we're actively in that stage right now. By the way, we're actively trying to get from this stage to the next stage, and who knows? That hopefully people believe in us, especially in Bumsu, and will support it.
Just to hit on this term FPGA, this is a field programmable gate array, and this gives the guys like yourself flexibility to implement custom hardware functionality without having to design custom chips from scratch. Um, is this is always in the prototyping and R&D phase that you're doing
Yes.
this, correct? Yeah.
Yeah. There was actually a brief period in Bitcoin's history where people took, because we're migrating from the GPU to the ASIC, and there was a brief period where systems came out based on FPGA, but it's really not economical, and it doesn't. It's but it's a stepping stone. I appreciate you clarifying the term for folks. I'm sorry for dropping
Oh,
that.
no.
But it's just to say that maybe if I could put it in a different term, you could think of it as very early prototypes are already working. Put it that way.
Yeah. Without
Not
much
ready for
without much
production,
risk.
not ready.
Yeah, without much
Yes.
risk of it being actually on the hardware, yeah.
Yeah.
Let's talk about this chaos. Okay, so I think the conversation probably starts best by saying you don't like the term ASIC, or that you think that there's risk in the term ASIC. So go ahead and
Yeah.
start there, Bob.
Yeah. So, well, I mean, ASIC used properly is fine. We've just kind of defined what it is, which is an application specific integrated circuit. It's a chip designed to do a specific thing. And that can be all kinds of things, like the car you drive, the TV you watch, the laptop that you might be on. They all have ASICs in them, maybe multiple ASICs.
Mhm.
And so the basic idea is when you have a circuit and it does something, like maybe it's the headlight control of your car, and the dimmers and turn the brights off when a car's coming, all that sort of logic. That could be in an ASIC, and it probably is in whatever car you're driving. We have taken as an industry to calling the machines like an S19 an ASIC.
Mhm.
The machine itself, which includes usually several hundred ASICs chips, but in and of itself is not an ASIC. And some might just say, "Oh, Bob's this old guy who's kind of ornery," but hopefully my the reason why I'm a stickler in this one will become apparent here in a second. So it is completely inappropriate to call the machine an application-specific device, and I would say actually very dangerous to call the machine an application-specific device. To exemplify that, let's look at, some of you might remember DAME. It was Digital Assets Mining Act. About a year ago, the Biden administration proposed this tax. It was a proposal to tax energy consumption of Bitcoin miners at 30%. Got defeated. However, in places like Sweden and Kazakhstan, similar legislation already has been imposed and is in place in like those sort of countries. So an attack vector to Bitcoin are legislative, regulatory, taxation directives at the industry. So when we call a given device like an S19 an ASIC, we're playing into that hand. We're saying, well, this is an application-specific device, therefore the energy consumed by that device can easily be subject to whatever this act is trying to impose on it. I find that very dangerous. You might say, well, Bob, isn't it an application-specific device? So, well, it doesn't have to be. And so when this started coming about, my thought process about it actually started Kazakhstan. When the China mining ban occurred, a whole bunch of hash rate went to Kazakhstan. Some of you might remember that. Well, it suddenly did put a big strain on their countries. It was a relatively small country, and it did put a strain. And so they imposed it
from an energy standpoint, you're saying?
from an energy standpoint. Yeah,
Yeah.
you had this relatively small country with very low energy costs,
Mhm.
and they got flooded overnight.
Mhm.
And so I understand to a certain degree why they did that, right? They did the simplest thing they could do, which was, well, hell, we'll just tax these guys.
Mhm.
Um, and they may view things like property rights and civil rights very differently. I don't profess to understand much about the Kazakhstan constitution. So anyway, as I looked at that, what I realized was, well, I don't think these have to be application specific devices. In fact, what I believe we can do is prove to the world that they can do other things. If you look at an individual machine and certainly at the network as a whole, what we call the Bitcoin mining network, or what we call an S17, they really are entropy engines. And they have greater than any device ever produced in the history of mankind the ability to create entropy. So I said, well, I think I'm going to start a new venture. I did found this one myself and fund it myself, called Chaos, CAOS. And again, for those of you who are maybe not as uh, well versed in scientific stuff, but chaos and entropy and randomness are kind of all the same thing, right? They're kind of birds of the same feather. And I know you have a background in engineering too,
Yes.
Preston. So
Yeah.
you've heard of chaos theory, and you hear about entropy talked a lot about within the world. Saylor's done some great stuff on entropy, right? So I said, well, why don't I create an entropy engine with this thing instead? And so my first step was to prove that we could do that we could write software that we could run and interact with, as an example, an S19, and not mine Bitcoin, but just create massive randomness. And by the way, do it in an auditable and verifiable way. That's the other thing about randomness, is that there are sources of randomness. So for instance, the greatest sources of randomness today, if you have a need for a random number, some of the greatest sources are devices that monitor atmospheric noise and kind of translate atmospheric noise into randomness. There's a group, if you're ever interested, go on YouTube and search for like lava lamp entropy or lamp randomness. And there's a company out there that uses the globs of lava lamps to create random numbers. But all of the random number generation that kind of sits out there in the world is still dependent on an interpretation by a third party. It requires confidence that the third party algorithm isn't subject to patterns itself or corruption. It's very difficult. So what we did is we said, well, we are going to use things that we learned from Bitcoin, but apply them completely differently and use the machine in a different way, which was, we are going to create sources of auditable and verifiable random numbers. And there's a massive market for that, by the way.
Massive. Help people understand what the value prop is here, because they might be hearing this and be like, this don't make any sense. But when you get into encryption and you get into the security of telecommunication systems,
Yeah.
this is vital. Like, this is because you get into elliptic curve cryptography, and you get into creating a private public key, and so much of the risk comes down to how random was the numbers that were being used on the processor to create this stuff, right? And you were
Exactly.
talking about the thermals, like, now you're physically taking a picture of something to convert that into randomness, right? But you're limited, you're rate limited by that physical thing that's taking the picture or the
Yep.
lava lamps that are moving, right? And can that, I would assume that'd be way slower than using a Bitcoin miner, which can just churn it out cryptographically provable way faster. Is that correct?
Yes, that is correct. And if you are using random numbers, I mean, a simple one is a lottery.
Yeah, yeah.
Lotteries have been corrupted, right? So we can talk more about gaming in a minute, but gaming is probably the single biggest market for this. As you've said, anything involving cryptography, passwords, signal integrity, protecting a line of communication signals. It's used in financial modeling, like Monte Carlo analysis. I have a story for another time about back from my gateway days, but I don't want to detract from this too much. But we did a lot of work in this area, working with pharmaceutical companies to help them crunch numbers, because
Mm.
so much of the pharmaceutical research today is to look at, hey, there's a given protein, and here's a virus, let's say, and how will this protein potentially dock with this? And what you want to do is you just want to throw a massive number of permutations at this thing.
Mm.
And you want them, but you want them to be truly random. You want to make sure you're not prejudicing anything in any one way, right? So what we've created, and I'm gonna very, very shortly, I will tell you this. I'm gonna have a website called chaosengines.io. CAOS engines.io. The preliminary is going to be beta-ish, so bear with me, folks. But it will come out here shortly. Today's whatever is it, February 13th. It'll come out shortly, probably before the end of the month.
Here's
Beta will
what's
come out.
Bob, here's what's neat about this show. A ton of our listeners are from the future. So they're
Yeah.
listening to this a year from when we recorded it. And I'm sure your site looks amazing right now for many of these listeners.
Well, I'm looking forward to that. But what we're going to do is we're going to provide this a free service to people. Like if you just need a random number,
Yeah.
or something, you have a bet with a friend, we'll be able to provide you an auditably verifiable random number. And how can we do that? Because we use the same technique that Bitcoin uses.
One of the most common questions I get asked from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you easily buy Bitcoin with zero fees on recurring orders, you can have peace of mind knowing Bitcoin on River is held one-to-one in multi-sig cold storage, all while being fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built their own infrastructure from the ground up, which means they don't rely on third parties to function like other Bitcoin exchanges. River also just created a new feature not found anywhere else called River Link. It allows you to send Bitcoin over a text message to easily orange pill your family, pay a friend for dinner, or send a gift. There's a new standard for investing in Bitcoin, and River is setting it. Go to river.com/fundamentals and get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals.
Similar block construction, similar hashes, similar all those sort of things, but we're using the output in a completely different way. We are also working on a gaming platform itself, which will be called chaoshouse.com. And it will be a place where you can go and you can play blackjack or a dice game or flip a coin and gamble on it. But know that the source of the numbers generating that game come from an
A
S19.
verifiable entry.
And they are auditable and verifiable. And if you can say, I can't believe I just rolled 3 sevens in a row on a craps table, well, we can prove to you that no, you actually just did. Or you lost 14 hands of blackjack in a row. We can prove to you, no, you really did do that.
So if the numbers are truly random, can you take the other side?
Yes, thank you for bringing that up, Preston, because a neat thing about our gaming platform is we will allow people to play either side of, you can either be the house or you can be the player. So it's
Oh dear Lord.
so we're
So it
having
becomes
fun
truly
with this.
it becomes a liquidity provider, like a source of liquidity.
Exactly.
Like I guess I'm thinking through. Yeah, I would have to sit down
Yeah.
and think
Well,
about
when you
some of
become the
this.
house, that's really what you're doing is providing liquidity to the house side of the equation. And, and, uh, so what it does is, because I want to get back to the main point, this all
Yeah,
started from, and I think this is really important, like philosophically, like whether you even like what we're doing or not, you can hate what we're doing. But what we are doing is proving that an S19 or a similar piece of equipment does not have to just mine Bitcoin,
yeah,
and that it can and it will be used to do other things. Just like I happen to be on a MacBook Pro having this chat with you, that machine could mine Bitcoin today. It could also run an Excel spreadsheet or run this Zoom session. So if you're a government entity and you know somebody has an S19, you can't necessarily assume that it is mining Bitcoin. It could be doing something completely unrelated to Bitcoin. And therefore, in my book, it would be a massive invasion of privacy for you to be asking me what application I am running on my computer. An S19, think of an S19 as just a different type of computer. It's just and so if we are going to allow the government or any entity to infringe on our privacy and our right to use our computing power as we see fit, I think we should all, even if you hate Bitcoin, probably not listening to this if you hate Bitcoin, but even if you are, you should stand with us united that this would be a massive intrusion. Same on energy usage itself. So,
yeah.
use computing power as you see fit and use energy as you see fit. Those, I believe, are intrinsic rights
Yes.
that we need to protect. If we do not, and we allow that threshold to get crossed so that people can intrude on what we're doing, then everything's lost, right? I mean,
Amen. Amen. Because if you're a net producer in your day-to-day activities and you've stored your retained earnings of this excess that you're producing for the world, I and you believe that you should be able to spend that excess any way you want. That somebody shouldn't be able to come in there and say, "Oh, I don't like the way you use your washing machine. I think you should do that by hand." It's like, no, how about this? Go screw yourself.
yes,
Yeah,
exactly, exactly. It's a very dangerous slope if we
very.
go down that path. And I would say that's definitely true in the United States where you and I are, Preston. But I would say to everybody around the world that might be listening, think about this and push back against it because it's already happened in a couple countries.
Mhm.
And I don't think the people in those countries realize what they've allowed to happen.
Yeah, you got to fight back. You had some math. I think you posted this on Twitter, X, whatever the heck we're calling it these days. Um, a couple months back, you were talking about the math on the halving, and uh, it made total sense. But I think for a lot of people that would hear the way that you're laying this out, they might take a step back and say, "Wow, I wasn't kind of thinking about it from that perspective." Do you know what post I'm referring to? In reference to,
I'm
like, the
not sure.
reduction. Well, you
The
were talking
fees?
about the fees and how the
Yeah.
math is really kinda changing, from where it
Okay.
was a couple
Yeah.
cycles ago. Yeah, lay this on
Sure.
us.
Sure. So miners are rewarded with a subsidy and fees. Subsidy is currently 6.25 Bitcoin. The fees have a historical average of about a third of a Bitcoin. Recently, they've been up. In 2023, they were up slightly from that number, but largely unchanged interestingly, largely unchanged over the entire history of Bitcoin. So interestingly, as fees have largely remained unchanged, the subsidy has fallen dramatically. And, it will now be just over 6% of what it was at the beginning, right? So we've lost 94% of the subsidy. And so it means that fees are climbing as a percentage of miner revenue, every halving that's happened. Now we're at a point where we're starting to see fees uptick. And maybe we can dive a little deeper into why I feel the way I do. But I believe we are on the cusp of a massive change in the fee structure. A lot of people probably don't like hearing this, but I believe fees will be face meltingly high in the next epoch and beyond. I will not be surprised if, as we exit the next epoch, the fees and the subsidy are about the same, meaning roughly 3 Bitcoin per block in fees and roughly 3 Bitcoin per block in subsidy. And then going into the next halving, which is only 4 years away, by the way, we're right there, right? We're 4 years away from the subsidy going to 1.56, and fees will still be 3. So what does that mean? That means by 4 to 5 years from now, miner revenue is 2/3. If I'm right, miner revenue is 2/3 fees and 1/3 subsidy. Dramatically, there's a huge ramifications of that, and for miners, but huge ramifications for everybody, really.
So so when we're thinking through this, the thing that I guess I find most fascinating with what you've said is that it's been about a third of a Bitcoin since inception, despite the halving changing, and despite, for the most part, the mempool. Well, I guess it got really full there in the, what was it, 2017, 2016 timeframe.
Had yeah,
Um,
couple brief periods, but we had the whole.
yeah,
I mean, we had all of 2023. It was packed
yeah,
the whole year.
yeah. We're like 195 blocks deep in the mempool right now, but the fees aren't too high. I mean, I think we're at like 20 sats per VB right now.
Yep.
Why do you think that you're saying that this next 4 years is going to really kind of turn it on? Is it all of the crypto that's coming and strapping itself to the side of Bitcoin? Is that what's going to drive it? What's the main driving factor? Because I think you could make the argument that these ETFs are reducing an enormous amount of transaction space on layer one.
Well, there's some truth to that latter point, I would say, for sure. But let's look at the math a different way. So each year, there are about 53,000 blocks produced. There's very little that can be done to change that. That won't waver. Each block has a capacity of 4 million weight units. Okay. And so for those of you who maybe don't want to think in those terms because it's a little complex, just think that an average block of 4 million weight units has about 3,000 transactions in it. Okay, so if we can translate that. So you have 3,000 transactions per block, and let's even round down and make the math even easier, 50,000 blocks a year. That means 150 million transactions. Now, those aren't the most efficient transactions. There's a lot of inefficiency in them. I think some things can be done to increase that efficiency, some of them by user behavior. And we may see, today's not the day to debate, CTV or covenants or any of those other things. You did a great job with NVK recently. So you guys covered that really well. But let's say then even the max is 200 million. Okay. So that means 200 million transactions. There's almost nothing that we can do to materially change that number. That 200 million transactions has to serve all 8 billion people in the world and the 330 million companies that exist in the world. We, for the last year, have been at full capacity. If you look at the whole year, I have one of my members of my team. We do a bunch of blockchain chain analysis stuff, and we pull our own data and we scrape it. There was really nothing. There was no room for more last year. Like the year was packed, and that was with. I mean, you tell me what you think, Preston, but let's say maybe 50 to 100 million people max active in the network.
Yeah.
And maybe one company, cellular company, about the only one of the 330 million companies. I'm exaggerating, obviously, but effectively 0 companies active, and almost effectively 0 people. So I give this example sometimes about scarcity. I put a lot of thought into scarcity. So one of the things to realize is that the price action on scarcity is nonlinear. So, here's the example I came up with. Hopefully it illustrates this. Pretend I have an apple tree. It's the only apple tree in the world. And this apple produces 100 apples per day. Now, at the point when demand for apples is 95 apples per day, they're really cheap. I'm throwing 5 away every day.
Yeah.
Okay. So the moment 101 people want apples, the price skyrockets. So it's only a change of 6 apples in demand that caused the price of apples to skyrocket. When 150 people or 200 people per day want apples, but my tree only produces 100 and there's no more apple trees and there's no way to increase the 100, it gets face-meltingly expensive to buy an apple. Now, the only caveat is if these people all want to eat 1 apple a day, then it's really, really face-melting. If some of them are in a non-urgent situation where they need an apple, then maybe they wait for a day when, for some reason, the demand dips from 150 a day down to 97 and they get one on the cheap. Well, this is my illustration of the way the Bitcoin network has been for the last year. We have been largely sitting at like demand for 95 apples.
Yeah.
And with maybe we bleed over to 100, 101. And when we do, what do we see? We see the mempool in very short windows go 5x or 10x on the estimate per VByte for a fee. So these transactions, like you said, some can be delayed, some can move to L2, right? So, okay, well, if I'm doing a small transaction, I can move it to Lightning. If I'm buying for just long-term holdings, maybe I buy the ETF. Yeah, so you're right, those activities can defer it. But there's still 8 billion people. There's still 330 million companies. And by the way, when you say you move something to L2 or you move it to the ETF, which I don't know, what do you call that? We call it an L2 or an L3, or I don't know what we call that. But
not L1.
Yeah, but that still, by the way, means that BlackRock or Bitwise or Franklin or one of these companies is doing a base layer resolution. Now, it may be batched with some other people buying the same day, but they're doing a lot of those transactions. So if we hit a bull run, which I'm fairly confident we're about to be in, if we're not already in, then if we see 50 to 100 million Bitcoiners move to 250 million, and then to 1 billion, and then to 2 billion, there's no way. Like, the base layer just breaks down. I shouldn't say it breaks down. It just cannot handle.
Yeah.
It just gets, I think that's one of the things is I've had, when I've talked about this a few times in the past, some people I think have taken it as me being like anti-base layer or anti-maxi or something like that. But I'm just trying to paint the reality of it, you know, and it is what it is. And the company adoption. So if you're Target and you start taking Bitcoin, how many times per day are you going to want some form of base layer resolution with the ins and outs of your money? Like,
Yeah.
I,
It's going to be a function of the fees. Yeah.
it's going to be a function of the fees.
That was so well. I'll be honest with you. That was so well framed from the initial conversation, because I think people hear the initial conversation and they're just like, okay, like, so how's he coming up with this? Is he just plucking this out of thin air? Is this his imagination? And like, there are very real numbers that are like slapping you in the forehead. Like, to be honest with you, until you framed it that way, Bob, I was kind of just like, maybe. I don't know. But when you put it in that context, it is so in your face that I don't know how anybody could disagree with you. Like, this is going to get aggressive. This is going to get pretty crazy. But at the end of the day, like, if you're not moving around enormous amounts of buying power, you're going to be priced out of settling on layer one. And maybe that's okay. I'm sure there's a lot of people that'll disagree with that. They think that but you're not going to have the security and the decentralization on layer one if you want everybody on the planet, all 8 billion people, to be able to do L1. You're not going to have that. So you got to have trade-offs, like anything in life, right? It's just
yes, that's the reality. We can't have our cake and eat it too, right? There's this trade-off, and it's what I went back to, like, why did I abandon Ethereum?
That was it.
Because of this. This is why. You can see that this is the path.
Yeah.
Now, there are major ramifications of this, clearly, because there is a mindset within the Bitcoin community that is difficult to kind of undo. This like, not your keys, not your coin. It's true, but not everybody can have their keys. Like, it's not practical. So, we can't tell everybody to do it that way. One of the things I've said in the past is that a lot of people look at the subsidy as a subsidy for the miners. I think that's typically because it's part of the reward, right? And they think about, this was to reward the miners through the dark days. I think that was only half of the story, though. And so we're obviously constantly amazed by Satoshi's genius, right? There's too much genius to have been coincidental. And part of that is, no, the subsidy was also a subsidy for the users. The subsidy was there to give a period of time in which we could have essentially unlimited access for free to the most secure network in the world. That was free, right? And the reason fees were effectively zero was because of that. It was to incent user adoption. I think that's over. The introductory period is over. This is like we're in early February right now. So probably in gyms all around the world in January, there's a free first month of membership in your fitness club, right? Well, that ends and you start paying in February. Well, that's where we are in Bitcoin. We're through the introductory period. And then there's a lot of ramifications, though, beyond that too. So, as an example, as a miner, when we move from most of our revenue being subsidy to most of it being fees, that means also that our revenue stream moves from something that is fixed to something that is variable.
Variable, yes. So now you're getting into derivatives. Yeah.
Right.
Yeah.
Right. And so, like you're much more astute and knowledgeable, Preston, than I am in the financial world. But one thing that I'm pretty confident in is that any commodity that's produced, for it to mature and really take off, there's like always a derivatives market, right? Whether it's an agricultural product or precious metal or whatever. There's a and part of that on one side is that the producers can lock in some certainty about future demand and future price. Like, so if you're growing corn in Iowa and it's May, you can sell some of your October harvest off. You may not sell all of it. You may sell a part of it, right? You sell a part of that future harvest, and then at a fixed price that you can be profitable at, and maybe you sell off 30 or 40% of it, and the rest you ride with the wind. And maybe as time goes by, you sell off more and more. The other side of that is there are companies that need corn to for whatever they make, right? Whether that's a bakery or somebody feeding cattle or whatever, they have the same thing. Like they have this variable cost structure, and if they don't lock in that price of corn, they have a problem. Okay. Well, block space is the same way. Block space in and of itself is a commodity.
Mm-hmm.
Bitcoin mining companies today, in today's world, I think if you said, what is the product of a Bitcoin mining company, you would probably say it's Bitcoin. And it goes back to that subsidy. What we produce primarily is the Bitcoin. We get these little tips or fees that kind of are just a little cherry on top. That flips. Maybe in as soon as 5 years, it flips to where, as I said, we have this variable thing. Well, the variable thing is not really tied to the production of Bitcoin. What it's tied to is the production of block space.
Mm-hmm. Mm-hmm.
So that's a whole different paradigm shift, right? Like that what we're producing is not Bitcoin. We're producing block space. Now, if I, as a mining company, to keep it simple, and we'll put it in today's terms, if I own 1% of the world's hash rate, and I also have control of the block template, meaning I pick what transactions go in the block, then I control 1% of the world's transactions. And those transactions are virtual real estate. And I can sell that. I can sell that into the future.
You can sell
Future
it OTC. You can sell it on the mempool, which is basically like a spot market, right?
Yeah,
But
right.
you have to be able to control the template.
Yeah. And so I believe that mining companies
Mm-hmm.
will work very hard to moderate some of that. Interestingly, there's a second side of it. If I am BlackRock, if I'm in exchange, I'm a company like that, I might be doing 100 base layer transactions a day, let's say.
Mm-hmm.
Now, right now, is that a meaningful part of my P&L statement? No, it's not today. But in this future world where fees are maybe 30 times higher on average than they are today, or 100 times higher, it becomes a meaningful part of the profitability of my organization.
Very interesting.
So what do I want to do? I want to buy these futures contracts and lock in a future price, so that a miner and then facilitate a relationship.
Yes.
So, I think this is an important part of the long-term health of the infrastructure. It's probably scary to people. There's even parts of it. I mean, I get a little willies myself but it's such a dramatic shift from where we are today.
Yeah.
But it kind of means, you know what? A lot of the financial institutions and a lot of the big guys are coming in. And when they come in, they are going to drive these sorts of, they have these needs, and they're going to drive these kinds of solutions.
The expertise in all of this, though, it exists, right? It's just not pointed at Bitcoin and the whole Bitcoin ecosystem yet. But the expertise around derivatives and like how to do a lot of these things, it's there in the world. It's just it's so fascinating to me that, like, as you describe this, it just seems like there's so much reinforcing behavior from a technological standpoint that only makes this thing stronger and stronger and stronger in a naturally occurring way, almost like as you would see nature unfold. When you see such complexity just manifest itself on top of itself. It's it's strange. It's fascinating. It's,
Yeah,
it's indescribable in
it
a
is.
really strange, weird way.
Yeah. Yeah, it's why not to get too deep philosophically or whatever, but I think a lot of times people in the sciences, and I would kind of consider myself on the periphery of that. They go through these phases, kind of from a religious standpoint. I'm not here to profess any specific religion, but you kind of go through a period where often people in the math and the sciences they lose their faith, and then it kind of comes back later in life. The deeper they get, like you start studying, and I just kind of as a hobby, I like to study the universe and like physics and things like that. And that's kind of my path. Is like, well, I actually became more spiritual, more belief in a higher power the more that I saw this stuff.
Mm-hmm.
And I'll go back to, I believe Bitcoin is divinely inspired. We should not worship it. Please don't take it that way. But
Yeah.
like
It's miraculous.
it is.
Yeah.
It is fantastic. And I'm sitting here. I told you the start of my story in 2017, deep, deep, deep in the rabbit hole, and still learning these things, still having these revelations. Hopefully doing something to make it better. I say for me and my company, I try to live the ethos. I try to do what's best for Bitcoin, in the belief that ultimately it will be the best thing for me and my family.
Yeah.
And and that's why, like, on this derivative product, I should say too, I am actively working with a company, ironically called Block Spaces, out of Tampa, to develop a product to do that. And I'm sure others will look in similar. I mean, there are already derivatives in, like, obviously Bitcoin and hash price and things like that. But the difference with this one, so I think it ultimately will become the most important, is that the need exists on both sides.
Yeah.
So, like, hash power derivatives, or hash price derivatives, excuse me, there's really not somebody on the other side of it. The other side of it is kind of speculators. So the miners need it, right? There's a need for the miner to say, well, I want to protect my investment. I want to protect my output. But there's not somebody on the other side who had kind of the same dependency. But in the case of block space, there is both a producer and a consumer. And
Yeah.
so I believe ultimately that's what drives this to become the single most important derivative product in
Wow.
our space.
Absolutely fascinating. Bob, I could literally talk to you all day. This was exactly what I knew this conversation was going to be. I'm just learning a ton. Every time I get around you, I personally get inspired from just your background, the expertise that you bring, and just how thoughtful you are from a very first principles standpoint. Can't thank you enough for making time to come on. You mentioned a couple things that we'll have in the show notes of the episode. Is there anything else that you want to point people towards that we can put into the show notes?
I'm at Twitter, boomer_BTC. If you look behind me, this is low. I do have a little show of my own called Old Man Yells, where I go on monologue rips of just me just ranting about something. So that's on YouTube and Spotify and places like that. But I always enjoy my time with you, Preston. I'm really happy that we got a chance to do this. Thanks so much for having me.
Absolute pleasure. Well, thank you, Bob. And for folks that checking out the show, be sure to look at the show notes and click on some of the links that we mentioned there and see what Bob's up to. So thank you, Bob, and we'll chat again soon.
Thank you.
This is what's so beautiful about mining, is that it's a infrastructure enabled and Bitcoin enabled revenue stream or cost saving stream. So if you say, all right, I'm going to go spend 25 cents a kilowatt hour to heat my house. Well, if I strap a miner on that, maybe I'm dropping that to 10 or 15 cents net of the Bitcoin reward. And so, anytime there's an opportunity to execute against those types of cost savings, I think industry springs up around it.